Hello, folks, and welcome to another wonderful winning Wednesday. It's cold outside. Wherever you are, if you are north of Virginia or the Mason Dixon line, one thing that I can promise you is that you are experiencing a significant amount of cold, but you're enjoying it, right? There's two ways that we can look at the cold. We can look at the cold as something that we don't want to be involved with, but we could also look at the cold and how we can, get into the house, snuggle up, and be warm with our loved ones. So, welcome to another wonderful winning Wednesday. I hope that you are not only winning today, but you're also winning when it comes to the week at the same time. Today, we have another exciting topic for you, right? And as always, we take stock of what's going on in the world, but also we take stock of how small business owners can actually leverage not only building up their credit profiles using just their EIN number, but also how they can take advantage of whole life insurance policies. And we're going to cover that today. So, insurance plus credit, building a long term financial safety net, not only for you as the entrepreneur, but also for you as the business owner and the steward for all things great that you are creating for your empire. So, welcome, Eunice. How are you today?
I'm doing well. How are you?
Are you winning on this wonderful winning Wednesday?
I am. I spent my day today catching up on continuous education, so it's been a good day.
All righty. So
And you?
well, I had several coaching clients today, and one of the things that I get the most joy out of is when you actually see someone turn a corner, right?
Hmm. Hmm.
When you act, and there is that light bulb moment that goes off,
Yeah,
and you can see that they are now saying to themselves, I am so glad that I took advantage of coaching, right?
that's good.
Believing in the power of coaching is something that is a goal of mine for every single coaching session that I have is I want to help my client to achieve whatever BHAG they had. I actually had to introduce that to one of my clients. She's in Quebec, and she wasn't familiar with the term BHAG. So I had to share with her that a BHAG stands for big, hairy, audacious goal. So now she's probably repeating that to all of her friends over there in Montreal. So it's been a wonderful winning Wednesday for me as well. Uh,
Good stuff.
we're closing out. We're closing out our day for the most part. So let's jump into our first topic. Right? How is insurance as a financial asset and not just for protection? Right? The one thing that I have seen is that many, if not most, business owners see insurance as an expense, right? And I believe that that is a mindset that can be quite costly. How would you come back on that one, Eunice?
Well, it's interesting because today, as I was studying, one of the statements that caught my attention was that your insurance, look at it as it's well, the IRS looks at it as property, right? And
Hmm.
we all know when you own property, many times you are building equity, And that equity is what most of the time helps a lot of families really establish some type of wealth, right?
Hmm.
So the way I look at insurance is that it is another vehicle that we have access to, that we can use to build wealth and to transfer wealth, right? So, in that regard, it is an important vehicle for anyone, whether you are a business owner, whether you are a family person, whether you are, whatever you are. It is there to help you in your pursuit to build wealth and transfer wealth.
No, I would agree with you wholeheartedly and 100% on that. Why don't you just double click on what the major differences are between term insurance and whole or permanent life insurance?
The major difference is really on the duration of the policy. When you're talking term, you're talking for a certain period of time, whether it's 10 years, whether it's 20 years, but it's a specified period of time, which means that when that time lapses, that policy is no longer active.
Hmm.
And your permanent life insurance is lifelong, which means that you have it until such a time that you pass on. Some people always say, well, you really don't need permanent life insurance because you only need insurance for maybe, the first 20 or so years as you're getting into the working force, you know, you're building you're building assets, and you're building, savings and things of that sort. So you don't really need permanent, because after a while now you should be financially sound to be able to take care of yourself and your loved ones without needing that permanent or lifelong type of insurance. So yes, the major difference is just in that duration. As it relates to who needs what and when, it's going to vary across. Everybody's situation is going to be different. Some people will opt for term because they are looking for something temporary. That's great, that's fine. Some people will be looking more for something more permanent. That's also great, that's also fine. I hope that answers. That's a simple answer to your question.
Well, the bigger thing that I would add, well, I would say yes, and right, is that many people may not know is that insurance can store, grow, and protect capital simultaneously when designed correctly, right?
Yes. Yes.
Emphasis on designed correctly, right? So you
Yeah.
can use a well structured whole life policy as a liquidity reserve.
Mm-hmm.
You can use it as an emergency fund replacement, or you can use it as a self banking tool to explore opportunities, right? So here you not only have the death benefit and protection of a life insurance policy, you now also have a liquidity reserve, an emergency fund replacement, and a self banking tool so that you can take advantage of opportunities as and when they become available.
Yes. And one of the things that I want to add with what you just said, and that I love with the topic that we're having today, which is insurance plus credit, building a long term financial safety net, is that it's a long term strategy.
Hmm.
Oftentimes, I hear people who say, can I open up this customized insurance policy today and in about a month or two have access to twice the amount of money that I've already put in? And my answer is always, this is not a get quick rich scheme
Mm,
by any chance. It is long term. You're not going to put $50 this month and expect to have $200 in 2 months.
mm,
It doesn't. And if somebody says to you, buy this policy today and in 2 3 months you'll have access to double or triple the amount that you've put in, question that. I'd love to see that. So it's a long-term strategy. All that means is that as a business owner or as an entrepreneur, you have the opportunity to own a policy that's going to give you access to two very important things. It's going to give you a death benefit, which will go out to your beneficiaries when you pass on.
mm.
And then as you are alive, it, depending on how it has been structured, you can really grow cash value that you can use in the long run to help your business or to help yourself. You can accumulate this cash that you can later on use for other things, whether it's to grow your business, whether it's to start up a new business, to buy equipment or to buy a car for your business or for your family. It's long term. It grows over time, but you have access to that money, and that money that you have access to does not follow the same requirements as credit if you were to look for either a loan or looking for funds at what applying for financing or things of that sort. You have access to it. It's way simpler and more cleaner way of accessing funds where your credit is not pooled, where you don't have to upfront commit to how often you're going to be paying or get on a payment schedule to say every month this is how much you're going to be paying. It has all those advantages.
No, I agree, and we have spoken about that.
Quite a lot.
I don't know, quite a lot. Hopefully, the message is starting to resonate, and I think that we have actually spent a lot of time on that particular topic, so we can turn our attention to how business credit is actually leverage and it's
Hmm.
not debt, right? Because if you have working capital, that working capital can be used to pay off an expense, right? Or you can keep that working capital for opportunities and now rely on the business credit that you have. So business credit is actually leverage, not debt. And the reason why I am saying that is because you have some people who are afraid of this word called credit, right? And I think that that's, fear, which stands for false evidence appearing real, because credit is only dangerous when it's misused or misunderstood,
Yeah.
right? What would you add on to that, Eunice?
No, I agree with what you're saying. When you don't use it correctly, that's when you fall into the danger of now not being able to make your commitments to pay that credit. And then oftentimes that's when people start saying, oh, credit is bad. Don't use credit, use all your money. And oftentimes that's when the word leverage has never really been kind of discussed with you so that you can really understand what leverage means as it relates to credit,
No.
having
And I
credit.
think that is a mindset shift, right? Where you stop looking at credit as debt but you start to see credit as leverage. But remember,
Yeah.
credit is not leverage until it is structured properly
Yeah.
and it expands your options without increasing personal or business risk,
Yeah.
right? So let's double click into how business owners can actually start building out their business credit. The first thing is they have to recognize and understand that there is a power to building credit using only your EIN number, right?
Hmm.
It's not something that is straightforward. It is definitely something that we had to do when we started up our business. But I believe that when you are a business owner, the best investment outside of coaching that you could have for yourself is to build out your business or your corporate credit profile that is only reliant on your EIN number. Does that make sense?
That makes sense.
The reason why you want to have all of your business expenses recorded against your corporate credit profile is it does one of the most critical things. It separates your personal and your business credit from each other. And what does this do? This protects the household on the personal side, right? And
Hmm.
some of the things that there's a knock on effect to doing this, right? Because when you have business credit, not only do you increase the value of your business, because if you were to sell that business, you've already done the hard work of establishing a strong credit profile for your business. But a strong credit profile also improves your access to funding. It's easier to get funding using only the EIN number when you have a strong corporate credit profile, right? But approval isn't always the name of the game. What happens if I get an approval, but the cost of that capital, i.e., the interest rate, is enormous and it's going to be a detriment to the business long term? Is that
Mm.
something that I should take? I think not, right? But also, it increases your negotiating power when you are having conversations with lenders and vendors because now you are in a position because you understand what your paydex or your IntelliScores are. You can go in and now negotiate for better terms. I think that's one of the biggest takeaway. Now you're using it as leverage, but now you are also coming in from a position of strength and being able to negotiate at the same time. Does that make sense?
That makes absolute sense. And just before you move on, you are talking about leverage and you're talking about credit, having access to credit. What do you say to business owners who say, well, right now I don't need credit. Right now I have cash flow, or right now I have access to, funds. I use some of my funds, or I can loan myself money. What do you say to business owners who say, what if I don't really need credit right now?
Well, my initial response to that is short term thinking,
Hmm.
right? Because the name of the business, and I'm going to use a term called KGAR, right? Hopefully, all of our audience understands what is KGAR, but it stands for Compound Annual Growth Rate. In business, as the CEO, you should be thinking about, well, how can I grow my business? Right? So, yes, today you might not have a need for access to credit lines and loans, but tomorrow, as you are looking to grow your business either through acquisition or you're hiring or you need equipment to be purchased, which is long term, and you, as the CEO, should not really be worried about the operational and tactical aspects of your business. You should be focused in that strategic zone. And by focusing on that strategic zone, and for me, strategic means 3 to 5 years out. If you're focused 5 years out, you're going to be setting up your business so that it's able to grow, and finances will not be a headwind to hold you back from achieving that growth.
Definitely, I agree with that.
All right, let's touch on our last topic of today. We've already talked about how you can leverage insurance, right? And we also touched upon today how you can leverage credit. When you combine them together, right, the sum is greater than the parts. And whenever I have a scenario where I have the sum being greater than the parts, I call that a synergy, right? It's when two
Yeah.
companies come together and now what they've created together is much bigger than what they would have been able to go to market as individuals, right? So what happens when you have a synergy that combines insurance plus business credit, that to me equals financial resilience, right?
Mm.
And guess what? When we were actually, with our business, we were getting advice from our banker, right? And then we were getting advice from our insurance provider, right? What happened is that either one, both of them were looking at their own swim lane, right? What we needed at that point in time was we needed our advisors not to stop and think only about their swim lane, but how they could combine those things together, which is what we have done, right? And bring both of these together to create a major thing. So
Mhm.
basically, when you have the combination of insurance and business credit, it creates for your business and you personally somewhat like a shock absorption financial system, right? Because there are going to be times where your cash flow dips, right? So you now need to cover a loan payment because the cash flows didn't come in as you had anticipated,
Mhm.
right? Now you don't have to go and apply for a loan. You have the cash value to take on that shock, right?
Yeah.
Financial shock absorption system. You could also, during that time, not only survive during economic downturns, but guess what? You can fund opportunities without having to liquidate assets at the same time. I believe when you combine all of these together, guess what? It shows financial resilience.
I think it's a powerful thing as a business owner when you are in a situation where you can say, how can I grow my business? Where can I deploy my funds to grow my business? Versus, oh no, where am I going to get funds to grow this business? So being in a position where you have not just one area that you can maybe go and tap into, but have a few options, that
Mm,
gives you so much more leverage when many others are trying to figure out where can I go, what can I do. You already have these things in place. You are not going to start off by putting in an application. You have access to these funds already.
mm,
You can act quicker than someone else who's still going to say, okay, where can I throw my net at and hopefully I'll catch something. You can be more precise because you know in this account, this is how much I have. In this a line of a credit, this is how much I have. And based on whatever you are looking to do, you know, okay, collectively, this is how much I can do. Let me put my best foot out. versus somebody who's going to be saying, let me go think about where I can get this amount and do this.
No, you now have multiple capital access points.
Mm-hmm.
And the best thing about this is that you have created a capital stack that isn't reliant on only one funding source,
Yeah.
right? Because we know that in business, cash flow is king, business credit is queen, but you're also worried about your liquidity, right?
Mm-hmm.
Because cash flow is not always predictable, right? So again, I want the audience to be able to rely on that combination of using insurance and business credit to create a financial shock absorption system. This is not just a conversation about funding, right?
Yeah.
So, Eunice, I think that we have basically tickled our audience with some creative ideas that may have opened up their purview to other opportunities, right?
I
My
believe so.
Well, yeah, no. My closing message, or part of my closing message, is that the goal isn't just access to money, it's access to money without panic,
Yeah.
without penalties, and without personal exposure, right? Because we already know the statistics on small business owners' survival, and lots of them aren't going to make it past year 5. But as the business owner, the CEO, or the chief steward for your organization, I believe that this is definitely something that you should do. So if you have any questions or concerns, we have the VIP Insurers QR code at the top of the screen. On this side, you can see it over here. So you want to be able to click on that at the same time. You will then be able to put time on the calendar for Miss Eunice. Miss Eunice, anything else before we close out?
No, it was another great conversation. As business owners, we love sharing this information. And if you are a business owner as well and you have a message that you want to share with others, maybe, you know, how you grew your business and how your business is going, would love to hear from you. We are always interested in learning from others and in being able to positively impact our communities that we serve or that we operate in. So if you are one of those, reach out to us as well. We'd love to have conversations, would love to bring you over here and have good conversations so that we can continue growing and sharing all this information with other business owners.
So, as we close out, if today's conversation opened your eyes to how insurance and business credit can work together to protect your business and expand access to capital, don't stop here.
Mhm.
Take the next step by scheduling a complimentary capital and credit strategy call with VIP Business Credit. This is what we're going to give to you. We'll evaluate your current credit profile, find or identify funding opportunities that you may be missing, and show you how to build a financial safety net that doesn't rely on personal guarantees and much worse, panic decisions. So visit us at VIPBIZFUNDS.com, VIPBizfunds.com, and book your strategy call today because smart business owners don't wait for a crisis to get prepared, they stay prepared. So, with that being said, I am wishing you the rest of your wonderful winning Wednesday. If you're up north, you're dealing with some cold. But if you're down south, you're probably enjoying 70 or 80-degree weather. But that's okay. Make the most of both of those scenarios. But you know that if it's going to be Wednesday at 4 p.m. Eastern, come and join us for a conversation. Have a good rest of your day and a good